Hey, hello guys, welcome to our stock session. Solid as a stock, so hopefully it's obvious what it is that we're covering. We're going through stocks, so welcome. I just need to make sure that I can see the chat boxes, so you guys that are with me, obviously let me know that you're with me. Let me know that you can see me and hear me and things like that. Let me just make sure again that I've got it on a couple of places so that I can't miss you guys on the chat box there. So welcome to the stock session. In the stock session, what we'll do is we'll go through a few different things. I'll introduce the session properly and explain what the layout is. Before we do that, let's just make sure that the disclaimers are being highlighted there on the top. There they are. So, of course, it's important to understand there we go, put my chat boxes up properly. It's important to understand these disclaimers for legal reasons, but also to get that these are demonstrations, these kind of videos. So we'll show you what we do and how we do it. You can ignore me, you can take it on board, something in between, ultimately up to you. So I've seen there, hello there from Steve. So yes, you can hear me, see me, that's all good. Thank you, Steve. Okay, brilliant. All right, so just to let you know, anyone that's in the room, wherever you're joining us from, whether it's through YouTube or whether it's through our closed coaching community, ideally ask as many questions as you have. Anything that I say that makes sense, doesn't make sense, that you need a little bit further explanation on, please just let me know in the chat box. Ask me to look at a particular stock if you want me to look at it. Ask me to explain a particular concept if you need me to do that. These sessions are for you. I want to make sure that you get the best from them. Now, I know my head is in the way, but my name there is Becky Hayman and my email address is becky@traddictiv.com. So you've got that as an email address if you need to get hold of me after the session, if you have questions. Ideally, I'd actually prefer that you use this link here, tradewithufos.com/Becky to get hold of me, and I'll show you why. So you're probably already a member if you're watching this video, or you may be completely new. If you are completely new, you can come to this link, tradewithufos.com/Becky, get yourself a free Trade with UFOs membership at the top. And then when you scroll down, there's a place here that you can ask questions in this public setting. And that then means that I can answer it in a public setting. So it means other people see the questions and other people see the answers, which is ideal for obviously the community learning from each other. You might have a question that somebody else has already asked, in which case you have the answer there already. You don't need to send the question, and you're doing somebody else that favor if you post a new question. So ideally, that's where you go. Okay, so just coming back here and just to explain the, where am I? There we are. Just to explain the layout and the structure of these sessions. So we've said hello. Now we are simulcasting. It means that we are streaming in different places at the same time. So we're on YouTube, Facebook. I think we're on a different channel now as well, very recent, that's been added. And we're, of course, within our closed coaching community as well. So the ones that are free, YouTube and Facebook, etc., those are ones that, of course, you're accessing. You're not part of the membership, you're not paying for it, of course, and you still get access to these sessions. But then there are people that are paying $21 a month to also access these sessions. So what's the difference? Why would somebody pay? The difference is that the people that pay for the closed coaching community, they will get more of our time. So at some point during the middle of this session, I will cut off the streams to the free ones. I will always make sure that I at least give you one trade. So we'll go through different things that we've already done before and new trades that we find. If we don't find any trades, then I don't cut off the stream. So I'm not going to cut it off unless I at least give you guys one trade. Past that, the people in our closed coaching community will have access to the remainder of the session and perhaps more trades and more concepts that we go through. So that's kind of how we balance those things out. So hopefully that makes sense. So we will be going through the market environment. We'll be looking at closed trades, trades that have already happened, trades that are still open and how we might manage them. I will tend to give different options that you can do depending on the type of trader that you are, on the style of trader that you are, and then we'll look for some new opportunities. So again, any questions on any of that? You guys let me know, but otherwise let's crack on. So first things first, I just want to bring up trades that we've looked at before. So the last session, which was actually quite a few weeks ago now, I think it was about 3 weeks ago, maybe 4 weeks ago, we had a look at a few trades. Off the top of my head, there's 3 of them that we need to look at, but we'll double check. So we had SPY, this was put on, and we can see this went straight through. So the SPY, the spiders, that's the index for the S&P 500, which is the top 500 US stocks. We had an entry at this black line, a stop at this red line, a target at this green line, and I'm pretty sure we would have had another target sort of further down here. Now, it doesn't matter anyway about where the targets are because price came in and stopped us out, went straight through. Now, looking at the dates here, so we had a confirmed downwards climate on the day that it entered, so we wouldn't have cancelled the trade. On the day that it stopped us out, we actually had a change of climate, so perhaps we may have got out slightly before a full stop out. Otherwise, we would have been stopped out fully. So this one was a losing trade. Again, that happens. It's part of life, part of trading. So let's get rid of that then. Then we had Facebook. We put a Facebook trade on. Now, depending on how you manage this will depend on whether or not you're still in this trade. So there we go, let's switch that down. With Facebook, we had an entry at this black line, or we can maybe squeeze it out a little bit there and do it there. Entry at that black line, stop at that red line. We had a target here at the green line, and then we had a trailing stop for our second target. So what that meant is that when we got triggered here, this is when the trade got triggered, came in here, or it might have been, so yeah, it was early June, so yeah, it would have been triggered around here. Price went off, hit our safety target. So at that point, we're at break even. We've made half the trade. If it was to then go against us, we'd lose half the trade. Overall, break even. We keep that other half of the trade on to hopefully take advantage of this. Now, in this case, we had a trailing stop, meaning we were going to try and capture the market as it moved in our favor. Now, before we go on to climate, I'll just explain where you were likely to have got out at a stop loss then. So what I'm going to do is I'm just going to unsquidge price a little bit, just so we can see here. So based on my understanding and my experience of where UFOs are likely to be, it was likely to be that there would have been a UFO round about here, which means your stop would have been round about there. So you would have trailed your stop loss behind that UFO. And then when price came down at this point, of course, it stopped us out at that point. So that would have meant that we would have taken half of the trade at this point, and then we would have taken maybe 2.5 to 1-ish at that point. So overall, of course, profitable trade. We would have been in the back. We would have been making money on this trade. Now, let's say, for example, that you haven't looked at it and you're still in this trade. What would you be doing now? Well, you would be waiting for new green UFOs to form, and you would trail your stop below that or beyond it. So let's see. In this one, we have 339.19 to 338.22, but it's overlapping with another one. So this one here, do you see that? I know it's a little bit small, so let me make this really, really big here as much as I can to really make this point. There you go. So we have this UFO here. That one would be the one that we would use because it's overlapping another one here. So we would put our stop right there. So that if price is to fall down, it will stop us out at this point. Now we do that because if we get into the trade because of UFOs, then in theory, if it goes against UFOs at this point, that's where we're probably wrong and we want to get out. So you probably would have already trailed that stop and already got out at a profit. There's also another reason why you may have got out of this trade at a different point. You might be somebody that says, my trailing stop is nothing to do with UFOs, but only if the climate changes. That's another way of doing it. And again, I'll tend to give different ways that you can do things depending on how you think about the markets. So we would have got into this trade. We placed it early June, so it would have been around about there. We placed it there. So this is where we placed the trade. We would have got into the trade then at this point. And you see at this point here, this dot where the climate changed was this candle. At that point, you may have chosen to get out of the trade because the climate is no longer in your favor, meaning we got into the trade because we had probability upwards. That's what our climate was telling us. By the way, if you're completely new to this and you don't know what I mean by climate and UFOs, I'll get to it. I'll expand on them a little bit in more depth. But for those that might have joined me last time, hopefully this is making sense. We would have got into the trade because it was a thick blue dot, because we had probability upwards. So if the climate changes and tells us that we don't have that probability anymore, it makes sense that you might choose to then just get out of that trade and get yourself out at, again, roughly just over 1-to-1 profit. So depending on how you're managing that trade will depend on what you've done there. Now, you could again be somebody that says, I'm going to hold on to this. I think Facebook's going to keep going up. That was a good place to get in, and I'm going to hold on to it. And worst that happens is I'll get stopped out at this point and I'll sell it somewhere up here whenever I want to. You might be somebody that says, we now have red UFOs here, so if it hits that number, then I'll get out there. You're going to have different ways of doing this. To me, what I put on last time, what I would have done is have that trailing stop and got out as it followed UFOs upwards. But again, different ways of doing it. I think it's a good thing that there are different ways of doing it, because it means that if you don't have the time to check in and look at it regularly, to check for that trailing stop, and you can only come in and check the climate. If you're only checking the climate, you only need to look once a day. If you're checking for newly formed UFOs, you might need to check multiple times a day, depending on the time frame. And so one way of managing it might be more favorable depending on your lifestyle and the time of day that you're available versus the other one. Neither one's right or wrong. Either way, you would be getting out of a trade based on logic, based on something that's objective, rather than I'm just going to sell when I want to sell, which is a very subjective way of looking at the markets. So hopefully that makes sense so far with these two trades. And then we did have a third trade that we put on, which was we put it on TradeStation. So that was on the Qs, I believe. So let's get that up. So on the Qs, we had a trade here. Looks like it. That's where we put our numbers. So we would have had an entry here and a stop loss here. And then we would have had a target here. I don't know why it's not on the chart, but we would have had a target round about here. And again, most probably another trailing stop. If we're having a trailing stop, that means that we would be putting our stop at this point right now, just behind these UFOs that have gone in our favor. So again, hopefully that all makes sense as to the trades that we're in. Either you had a winning trade so far on Facebook and it's already closed for a profit at some point, depending on how you manage that trade, or you're still in it. Either way, it's still in profit at the moment. Same with the QQQ, same with the Qs. You might have already got out, you might have already hit a target, you might have already taken some form of, again, perhaps down here where price changed to a different climate, perhaps you got out then, and again you would have got out somewhere in profit on the Qs, and then the spiders were a loss. So overall, one losing trade and two profitable trades, if not still open trades. So hopefully that makes sense as to those. Now what we'll do is we'll look at the overall market conditions and start to look for hopefully some good opportunities. I ran a scan before we started and it's come back to say no symbols met the criteria, so I'm going to run it again. Oh, it must be, oh, that's one. Excuse me a second, guys. I'm just going to log back on. Move that over there. And that way we can run a scan and look for objectively good trades. If not, we'll just look through a few of the sort of major stocks and we'll have a look at what opportunities we have. So that should, there we go. I did run a scan, so hopefully before it disconnected me when it did do that, hopefully it still brought something back, or it doesn't look like it did. So I'm going to run another scan there, and then hopefully that will be done quickly and we'll be able to look at some decent opportunities. If not, like I said, we'll kind of just go through individual stocks and you guys can let me know again on the chat box if you want me to look at a particular stock over another. Okay, so why am I looking at the ES? You might think that's futures. This is a stocks class. Why are we looking at the ES? I'm looking at the ES because it's the futures representation of the S&P. So it's essentially giving me an idea of what the entire US stock market is doing. Now, why do I care about that? Because, and this isn't a have to, this is just a nice to have variable. If the market as a whole, and let me just make some white space here and use different colors to prove my point. So let's say this pink line is the market as a whole. So the market as a whole is going up. And this blue line is the stock I want to trade. Well, if this blue line is also going up, it's doing what the whole market is doing. There's a correlation. Normally, obviously, each individual stock put together move the whole market, but also the whole market will have an impact on individual stocks. So ideally, I want them to line up. It doesn't have to be. If I have a stock that's coming down, and individually that stock has probability to the downside, I'll still take it to the downside. I don't need it to be correlated, but if it is, it just gives me that extra variable that might go in my favor, where the sort of tide is lifting all boats kind of thing, right? So the tide is in my favor at that point. Doesn't have to be, but I tend to start with that. So at least the trades that we're looking at have that on our side as well. So hopefully that makes sense. So the ES is showing us on a, let's have a look at a daily chart. On a daily, on this bottom left-hand corner here, we have a thick blue dot that is probability upwards. By the way, I'm going to take this time to just explain what the climate and the UFOs are very briefly, because for those of you that might be new to this, it might have not really made sense up until now. So let me explain. These dots that we have down here, these show us where we have probability, up, down, or nowhere. It's an app called AutoClimate. It's a free app on most platforms. And what it does is it will scan through the market and it will come back with a series of dots to then tell us what the probabilities are. If it's a thick blue dot, like that one, that tells us we have probability upwards, meaning we should probably look to buy. If we have, that's strange. There you go, just highlight that again. If we have a thick red dot, that tells us probability down. We should probably look to sell. If we have a thin dot of either colour, and they're slightly harder to see, but I guess that's kind of the point. If we have a thin dot of either colour, then that's not enough probabilities either way. We should probably do nothing. So we're answering that question. Should I buy, sell, or do nothing? By using an app that just gives us that answer very easily. We're not analysing anything. We're not getting confused over anything. We're not being subjective. The app tells us, the technology tells us, look to buy, look to sell, do nothing. Question answered. Then what we want to know is if we're going to buy, I'm going to change this time frame here, where are we going to buy? And if we're going to sell, where are we going to sell? We don't just want to buy and sell in the middle of nowhere. That's a very subjective place to buy and sell. It's unlikely to go in our favour. We'd rather buy, if we're going to buy, where there's lots of other buying. That's why we use the UFOs. UFO stands for unfilled order. I know it looks like they look like little flying saucers there, but it does stand for unfilled order. Basically, what that's showing us is where we have, if it's green, it's where we have buyers. If it's red, it's where we have sellers. Now, if we're buying, we want to buy where there's lots of other buyers because it's more likely to push price up. And if we're buying, we want price to go up from there. So these UFOs show us exactly where we have highest probability to buy. If we're selling, then we want to sell where there's lots of other selling. Because if there's lots of other selling going on, it's much more likely to push price down. So we use UFOs that show us where the sell orders are and sell at that point. Gives us more probability. So hopefully that puts into context the things that we've gone through so far. So what we're doing here, and we'll look at different time frames. I'm going to have a daily chart for our climate to start with. We can change time frames if you guys ask me to, but we'll start with daily on our climate, and we'll start with 55 minutes on our lower time frame. If you can't see a 55-minute, then 60 minutes is fine. It's not going to be too different. We use a 55 because it's a Fibonacci number and it tends to give us more accurate UFOs, but it doesn't change too much. If you can't see a 55, it's not a big deal. So these are the timeframes we're going to use. We know that we are ideally looking for trades to the upside. According to my scan, we don't have symbols that are matching the criteria. So let me just double check what the criteria is. It should be, yeah, it's our standard criteria. It's strange that we don't have anything that's come up from the scan. Might be an issue with the scan. So what we'll do is we'll come down to our FANG stocks and we'll go through those and we'll see what opportunities we have. We'll go through some ETFs as well. I'm sure we'll find something. If not, you guys in the chat box, just let me know. Just put, I don't know, have a look at this stock for me, or can you have a look at that? Give me the symbol for it and we'll go and take a look. So let's just go through these one by one. Let's take a look at Facebook and see what we have here. First things first with Facebook, very easy answer. And again, this is why we use technology to help us with this. I didn't need to do anything else other than come and have a look down here and see that this very last dot, which is the relevant one that helps us make our decision, is a thin dot. A thin dot tells us not enough probabilities either side. Do nothing. So great, I'm going to do nothing. I'll move on to the next chart. That's all I needed to do. This is why it's so helpful to use technology that helps us answer these questions, rather than have to analyze it, look at these different patterns, look at this, look at that, look at that. It was a yes or no answer. In that instance, it was a no, don't do anything. So great, I just move on to the next one, and it took 30 seconds to look and explain it and move on to the next one, as opposed to perhaps minutes per market that you're looking at, just to figure out that you shouldn't really be trading it. So with Apple, we have a thick blue dot. That's probability upwards, meaning we should probably look to buy. Now, there's something that we need to be aware of here with Apple, and that's these numbers. Now, you might not be able to see them, so I'm just going to write them bigger on the screen here. So we have 10, 38, and then it was 3, 33, and then it was 29. So this first number tells us how long that market usually goes up for. So it gives us an average as to how many candles that market goes up for. This second number tells us how many candles the market usually goes down for. And this final number tells us how many candles we are into the current movement. So in this case, we ignore this because we're on our way up and we've got a thick blue dot. And we just look at these and we say, okay, this market usually goes up for 10.38 candles. I'm going to round that up to 11 just because you can't really have a percentage of a candle. So we're going to round it up. 11 candles to the upside is what this market would usually go in. And we're on candle number 29. Which means we've gone way past what is usual in terms of a move to the upside. We're overextended. Now, that's not to say that it's going to drop any second now. It may continue to break that barrier and keep going up and up. But it's more than twice as far. So for me, in fact, nearly 3 times as far. So for me, I'm going to leave that one. I'm going to go to a different market because hopefully we're going to have better opportunities in this where we have these numbers on our side as well. Again, any questions on those numbers, you guys let me know. So let's move on to Amazon. Okay. Now, Amazon, again, we have this thin red dot. So it's thin, meaning we do not have enough probabilities either way. Move on. Very simple. We're not doing anything else other than checking this first, checking our technology that's letting us know whether we have probabilities or not. Now, Netflix, we have a thick blue dot, probability upwards, meaning we should look to buy. Same situation. These numbers here, it goes up for 5.6 candles. Let's call it 6. And we're on candle number 20, which means we're at least 3 times overextended from what is normal. So I'd rather look at a different market. Now, it is actually lining up for a good trade here for other reasons. So we might circle back to this one if we can't find a better opportunity. But I'm going to try and find a better opportunity first. So we'll move on to Google. Similar situation here. We have a thick blue dot, probability upwards, so that's great. But normally the market goes up for 7 candles. I'm just rounding that up again. We're on candle number 18, so more than twice as much. So again, ideally, we keep away from that. Let's move on to the next one, which is Alibaba. Thin dot. Not enough probabilities, move on. And this is what's great. Can you imagine if you had a watch list of 20, 30 stocks, and for each one you took 5 to 10 minutes to analyze, to come up with a decision that told you shouldn't be trading in? So much better to have something that tells you instantly, like this one. Don't trade it. Thin dot. Move on. We change time frame, we change market. So we're going to go through these first and go through a couple of ETFs. If we can't find anything, we'll change time frames. And if we can't find anything there, we'll come back to Netflix because that was a good place there. But we'll see this. Okay, so with this one, 783. Okay, so I'm going to explain why there's a different reason why we're not going to take this trade, but I'll explain it. So we have a thick red dot here, probability downwards. So it's kind of going against what the overall market is doing. This is NVIDIA. Overall probability downwards. Now, usually this market would go down for 4 candles. Again, I'm just rounding that up. And we're on candle number 2. So we do actually have room for it to continue to go down based on what usually happens. So once we've decided that we're going to look to sell, our next step, as we remember, is to go and decide where we're going to sell, which in this case is going to be our sell UFOs. Now, there's a few on the screen. So which one do we pick? Now, this is where we add a third variable that needs to add up. For some people, it doesn't need to add up. It's an extra confluence or like an extra sort of tick in a box. For us, it's a have to. Again, There are pros and cons to either side of those. I'll explain those in a second. So for us, what we also want is that the EMA value, which is the exponential moving average value from the bigger time frame, also coincides with the UFO's smaller time frame. Now, why do we want to do that? So EMA, you just write that here, it stands for exponential, there you go, moving average. And we're using the 9 period. Now, why do we care about this? Because EMAs are very, very commonly used. Clue is in the name here, moving average, right? It's moving with price. It's a line that moves through price. You see this grey line here, and then the price on the side? That's telling us the average of the price that has been up until now. Now, why is that important? It's important because a very common application is that if price is below the moving average, let's say the moving average is here, and then price comes up and hits the moving average, people sell. So sell orders coming in at that point. If price is above the moving average and price comes down and hits it, then people buy. It's a very common, very well used application, not just by retail traders, but also hedge funds will use that kind of strategy and approach as well. So what we're saying here is, if we have sell orders with a UFO and sell orders coming in from the EMA at the same price or around about the same price, we have even more probability. So for us, that's a have to. It doesn't have to be a have to. You will reduce your probability if it's not a have to, but you will increase the amount of trades that you can place. So it's a balance. For us, we'll place fewer trades, but the ones we place will have higher probability. Again, depends on how you feel about that as to which one's right. Now, the issue here is that the EMA value is at 783.61 now. So let me just draw a line randomly on the chart and we'll see them. So 783.59. So you see that EMA price is not coinciding with a UFO. It's also a relative distance away. So what that means is, as price comes up, the EMA value will move up. The question is, will it be that the price and the EMA value will coincide and hit each other at this price, round about where we have this UFO? At the moment, it's too far away to really judge that. It would be a guess. We try not to guess when we trade. We try to make educated, logical decisions based on fact and based on objective reality, which is what our technology is helping us figure out. So the technology is telling us it's not lining up at the moment. It's hard for us to figure out whether it would line up. Bearing in mind as well, price has got to get through 2 sell UFOs by the time it gets up there. So unlikely that it's going to line up. So again, we will move on to the next market. So that took a little bit longer to explain. But imagine if you know that and you check very quickly and you go, great, thick red dot, probability downwards. Where are my UFOs at? Where's my EMA? You have a look on the chart. EMA's there. Oh, okay, it doesn't line up. Move on. Again, it takes 30 seconds to a minute to figure that out rather than a lot of analysis per market. So let's have a look at Tesla. I don't know about you guys. I know that algorithms follow us around online, and so what I'm seeing on the news with Elon Musk a lot recently, it might just be because I've looked at news to do with him before, but I seem to be seeing a lot of crazy stuff about him and the things he tweets and things he said recently. So of course, bear that in mind when it comes to the Tesla stock and the effect that could have. Now, first things first, thin red dot, probability neither way. So we move on with Tesla. And again, like I said, with a lot of perhaps news impact that we have on particular markets, it might be better to keep away from them anyway. So let's have a look at Twitter. Let's see if we've been salvaged by Twitter here. We haven't. We have a thin red dot, probability nowhere, so we do nothing. So unfortunately, all of our FANG stocks that we've gone through on the timeframes that we're using are not giving us any opportunities right now. So we'll go through a few ETFs. We'll go through these top to bottom as well, see if we can find anything. If we can't, we'll change timeframes. It's usually very rare that we'd have to do that, but let's see what we have here. So SPY, we have thick blue dot, that's probability upwards, and we have perhaps, again, a little bit too far here. We might circle back to these where I might be being a little bit strict, but here it's showing us that price would usually go up for 9 candles, and we're on candle number 17. So just under twice as much as what is usual. So again, to me, that's too far. It's more likely that we'll start to see a reversal than it would keep going up. So I'm going to move on to the next opportunity. Like I said, we might circle back to these if we really have to, if we don't find any better opportunities. So very similar thing here with the Qs. We have market usually goes up for 8 candles. We're on candle number 29. So my maths can't do that very well. Nearly 4 times more than what is usual. So then let's move on to the diamonds. So here we go. Okay, so with this one, we might be in luck. It looks like we are. Okay, brilliant. I'm glad that we got an opportunity in the end. So we're looking at the diamonds here. Now, with this, we have a thick blue dot. That's probability upwards. We have usually the market going up for 7 candles, and we're on candle number 5. So probability that we've still got at least another couple of days in us to the upside here. Our EMA value is 348.15. So let's draw that. I'm pretty sure that that's within here by the looks of it. 348.15. Great. So our EMA is just within our UFO. Now I know as price moves down, the EMA will move down as well a little bit. But to me, it looks like, especially once we give it a little bit of wiggle room for our stop, we're going to be coinciding there with the EMA. So that's good news for us, which means we're going to take this UFO. Now what I'm going to do is I'm just going to finish this trade on TradingView. So this was the diamonds. The reason I'm going to do that is because different people use different platforms. I personally find TradingView easier to place trades on. It's much more simple, I think, than TradeStation. So I'll tend to use TradeStation as a way of doing my analysis, and then I will use TradingView to finish it. So we have slightly different data here, very slightly different data. And the reason for that is because it's coming from slightly different exchange. But actually, when we're looking at this one, it goes even more in our favor because we have 2 UFOs, other way around, 2 UFOs on top of each other, that once I draw this out, just roughly, I'll get more precise in a second. You'll see here over on the left-hand side, the EMA is very nicely, snugly inside that UFO. So that's what we want it to do. We want it all to line up. So great, let's have a quick look at this and let's be more specific, and then let's figure out where our targets will be. We'll place this trade. Again, those of you that are watching on YouTube or have any questions on the sort of free channels, by all means, let me know on the chat if you have any questions or if anything I've said doesn't make sense or if you need me to expand on anything. So this is the trade that we're placing. We are looking at the diamonds, which is the Dow Jones Industrial Average, otherwise known as the diamonds, and this is the trade we're going to place. So I find with TradingView, because all you have to do is click this and punch in a few numbers, I think it's a little bit easier than TradeStation. So what I'm going to do first and foremost, I've drawn, I know it's a Fib retracement, by the way. I use it as a drawing tool. I don't use it as it was intended, so sorry for that. Those of you that love Fibonacci retracement levels, I've manipulated it to be just a drawing tool for me. So what we're going to do is we're going to put the entry price, and again, we're just going to use the technology to be specific here. The entry price is the number that the UFO is, 348.83. 348.83. That is our entry price. Our stop loss price is going to be the number that the UFO gives us, which is 348.15. But actually, bear in mind, we've got 2 on top of each other. So we're going to take this bottom number of 347.34. I'm just going to take off 10 cents. So it's 347.24. That is going to be our entry and our stop. Again, we just took the entry number was the exact same number that was the top of the UFO, and the stop loss number was the bottom of our UFO then, minus 10 cents. I give it a 10 cents wiggle room. So that's our entry and stop. Our first target, this is where I find TradingView helpful. So we're just going to type in what our entry and stop will be into TradingView. 347.24. Great. It's now told us exactly how many pips. When it says pips, in this case, obviously that's cents. That's the smallest amount increment of price, how many of them between the entry and stop. So in this case, it's 159 cents or $1.59. So all I do to make it a one-to-one target, which is always going to be our safety target, is just type in the same amount of pips, same amount of cents. We risk 159 there to make 159 there. It's one-to-one. Now what I'm going to do here is risk $50. I'm going to risk $50 on this one half of the trade and $50 on the other half of the trade. I do that because it's an easy number to use. It's half of 100. 100 is a nice round number. Please use the numbers that are more relevant to you, the percentages that are more relevant to you and that make more sense for your accounts. So I'm just going to double check I've got everything in the right place, that I've got the stop loss and the profit and all of that. What I might do as well is draw on the chart a line as to where that will be. So 350.42. So it's really easy to visually check up on later. And then I'm just going to click buy, and that's gone in. Now my second target is going to be a trailing stop. We would usually use sell orders on the left hand side, but we don't have any, which means we're going to use a trailing stop, which is the same situation as we had in that first trade that I was explaining that we had from last time, which is what we're going to do is as price moves in our favor, if it moves in our favor, if it creates a new UFO, we're going to take this stop loss from down here and we're going to put it here, and maybe it moves a little bit more in our favor and it creates a new UFO. If I can draw it, there you go, creates a new UFO, and we take our stop loss from here and we put it here. That would be a trailing stop. So we're locking in profits behind UFOs. UFOs are acting as a little bit of a cushion then. Now, some people do trailing stops at just a set amount of distance. So X amount, if it moves $1, then I move my stop up by 20 cents. If it moves another $1, then I move my stop up by another 20 cents, or whatever your rules are. We use UFOs because if we think about the logic here, buy UFOs are where we have buy orders. So if price is, say here, and it starts to come down, in theory, once it hits these buy orders, it should go back up from there because it's come into a lot of buying. If it continues to go down and goes through that UFO, then there weren't enough buyers, or there's a lot of sellers now coming. If we're in a long position, meaning we make money if price goes up, we want to get out if a lot of sellers come in. So this point here is where we would be objectively proved that we are likely to be on the wrong side of this now. Things have changed. So we get out at that price. Now, on a 55-minute chart or a 60-minute chart, then UFOs would be forming perhaps once an hour. So you should be checking in on it once every hour or so whilst the stock market's open. Now, you might not be able to do that, in which case you can use the climate version of a trading stop, which means that as the climate moves forward, so let's say, for example, the next 2 days are blue, maybe this next one is a thin dot. So on that day, 3 days from now, you would cancel the trade and get out at whatever profit or loss it's open at that moment. Because you now no longer have the very first thing that we need to even have got into the trade in the first place is now no longer present, meaning things have changed. The climate has changed. We don't want to be in a trade that doesn't have that in our favor. So we get out. That might be in many days to come. You know, you might have thick blue dot and thick blue dot and thick blue dot for days and days and days, and it goes up and up and up all the way to here, maybe, and then it becomes a thin dot, and at that point you sell out at that point before probably it starts to come down again. So there are different ways of getting out of a trade when you're in it. You can either just set a target. You might be somebody that says, okay, great, I'm going to set a target at 3 to 1 away, 5 to 1 away, 10 to 1 away. You can trail your stop behind UFOs. You can trail your stop at set amount of distance. You can get out of the trade if the climate changes. What's most important, and I know for new people especially, it can be confusing if you've got somebody telling you you could do this, you could do this, you could do this. Pick one. Pick the one that makes the most sense to you and do that every time. if you sometimes do this one and sometimes do that one and sometimes do that one, you're not being consistent with your action, which means your results will be inconsistent. That will be frustrating. You're then way more likely to quit. So better, in my opinion, better for you to just pick one of those ways to manage the trade and do that every single time. So then that way, there's no, oh, I did well that week and I did badly that week. I don't know why. Is it because of this or is it because of that? It's always the same. Okay, so let's place this last trade, or this second half of this trade. So it was 348.83 was our entry. Our stop loss, it's remembered. And all we're going to do here is put in $50 worth of risk and not put in a profit target. And we're not putting in a profit target because, again, we're going to be closing this out somewhere along the way. So we're going to just press buy for that and watch that go in. And I'm just going to make a note here. Today is the 16th of July, I believe. Is it the 16th? I think I'm right. 16th, lovely. 16th of July, 2021. Trailing stop. And there we go. So we've got a reference to that. This was the trade that we finally managed to put in, which was on the diamonds, the Dow Jones and Industrial Average. We got into this because we had a thick blue dot, climate to the upside, probability upwards. AutoClimate, this free app that we can use that's telling us, hey, you should probably look to buy. So that's what we did. We looked to buy. We found UFOs. In this case, they were very close together, so we put them together. We found UFOs that coincided with the EMA. In fact, if I squidge this, we'll really see that. So we found UFOs that coincided with the EMA. Therefore, we have buying pressure to the upside from our climate, buy orders at our UFO, and buy orders at the EMA. Buying, buying, and buying. That's why we buy too, because there's more probability that it's pushing price upwards. And if we're buying, we want price to go up. And price only goes up if you have more buyers than sellers. So if we're going to buy, we want to buy where there's lots of buying, because they're going to beat the sellers and push price up. If we're wrong, then we will lose what we have dictated that we will lose. The max or the minimum amount that you could lose on this trade if you just traded the one share is $1.59. Of course, if you're trading many more shares in the way we did, the most we could lose in this example on this demo account would be $100 overall. Again, you will have it at different numbers, I'm sure. So hopefully everything's made sense so far. I hope I haven't confused anyone. If you do have questions, of course, you can email me, becky@traddictiv.com. Now that we've placed this trade and I've explained how we've done it, and I haven't seen any questions come through on the chat, I will assume that it's all making sense and everyone's happy. So I will leave you guys on YouTube and Facebook. We'll carry on in the closed coaching community. So I'll see you guys in there. Just give me a sec whilst I turn off the stream. For those that are on YouTube and Facebook right now, remember, you can go to tradewithufos.com/Becky, get yourself a free Trade with UFOs membership, and then you can ask questions in this space so that I can answer them there, and that can help everybody learn. If you're uncomfortable to do that, of course, you can email me. I'll be back on Monday with our 3D market commentary, so I'll see you guys then. We'll have sessions over the weekend as well, so join us on those if you want to. Otherwise, that's me over and out for now, and I will see you guys next time. Take care. Bye-bye.